McGough, actually have some sell signals on your list and buy signals, which is interesting, but not surprising because again, Quad 3 does not play kindly to parts of consumer discretionary.
To sell signals, I definitely get one. I saw you hit the button on is VF Corp, VFC, and I like this one a lot on the short side. I like it across durations. VF Corp, if you're unfamiliar with it, it's the owner of the North Face, Vans, and Timberland. And all of those brands have a problem right now. And they each have their own problems. I'm not going to go into each one of them individually, but the easy answer here is that when you have a brand problem in retail, there's one thing you can do to fix it, only one, and that's you have to spend capital. You've got to deploy money into pod two, really. So margins, you have to take margins in the wrong direction in order to make revenue go in the right direction. And VF Corp has to do that, and it's not. So revenue is going to keep melting down. What the company is doing is they're cutting costs very aggressively, and they're printing those in higher margins. That is a mistake. It's a very big mistake. They've got to be taking that capital. They've got to be putting it into higher R&D and marketing and branding and endorsements. But they've got the likes of Nike, who's spending so much. This is especially with Vans. Vans is going to just keep melting down. Nike is going to be eating its lunch here. And they're just doing the wrong thing. And everyone loves this management team at VF Corp. They talk about this guy, their CEO. His name is Bracken Darrell. He even has like a CEO's name. He looks like a CEO. If you saw a picture of the guy, he presents really well. Everyone loves him. But if he were a good CEO, he would have done what we said he should do when we made this short call at about $26. The stock's now at 13. He should have done an equity deal, a very big, like $1 billion equity deal with the stock trading at 26. If he is even remotely good, instead of being really good, he would do a huge equity deal right now at $13 and use his currency to actually fix his brands. That would be the right move here. I don't think they're going to do it. The only thing that takes a zero off the table is them doing a sizable equity deal in order to fix their brands. They're trying to grow the top line, improve margins, and fix their crippling balance sheet all at the same time. I have never, and I'm not the kind of guy who says just because I've never seen it, I won't see it. But in 32 years, I've never seen a company do this. I've never seen a company fix the top line, improve margins, and address a bloated balance sheet all at the same exact time. And that's what they're trying to do now. It's just a failed strategy. I think the end game here is that they're going to have to forcibly sell one of their three major brands, probably Timberland, because it's the best brand, most marketable to a private equity firm. They'd probably, if I were a PE firm, I'd pay $1 billion for Timberland. It's a good, very defendable business. It's not growing, but it's not shrinking. It's very easy to model. You get very predictable cash flow. It's a high margin product that doesn't need a lot of capital. But I think that VF Corp is going to have to sell this business when the stock's at $5. Tariffs are not going to help this company at all. In fact, they're going to hurt. They've got a lot of China, a lot of Vietnam exposure. So they're going to get tagged there as well, which is going to get in the way of their cost cutting. There's just really no way out here. So I don't like it over a tail duration. I don't like it over a trend duration. And now the trade duration is looking like it's a short too, with this stock being at the high end of the risk range. So that's VF Corp. I like that a lot on the short side, Keith.
The things that people say, right? I mean, that's the beauty of Wall Street, is that you can say anything and get paid for it. It doesn't have to be true, right? I mean, there's a long line to get into that graveyard of people who have actually done well for a short period of time that have gone away in this business, trying to generate alpha, in particular on the short side. And, like, so let's just do VF Corp. Like at 26, McGough would get on the call. I'm a big fan of going back and reviewing the tapes. I don't know what else you would do, but Tim Taylor taught me that. I think any coach worth anything would probably review the tapes, the execution of the process. I'm not too old enough to remember that McGough, when he was pitching, telling you to short VF Corp at 26, the pushback from the hedge fund community was, how could that be a good short? It just came from 50 to 20, it got cut in half. It was 50 to 26. Well, then it went from 26 to 10. And all the while they're saying that the CEO is a great CEO or even a good one. In what world, unless it's defined by millennials where everybody's a winner, is that a good CEO? I mean, 50 to 26 to 10?
In fairness, they brought this guy in after it fell from 50. But yeah, from 26 to 10, look, the CEO
that's
has
terrible.
The
that's
CEO
terrible.
has one scorecard, and that's his stock price.
I mean, that's terrible. You came in to fix it after the stock got cut in half, and it got cut by more than half. I mean, only on Wall Street, right? Wall Street is really set up for lemmings, right? Like the deal is that there are a lot of analysts under the age of 35 who are paid to believe almost anything, especially if their boss owns it. People believe bullshit all the time.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.